Good afternoon, everyone. My name is Esther George. I am the president of the Federal Reserve Bank of Kansas City, and I want to welcome everyone that's here today, both in person as well as online. I'm especially pleased to host this event here in Kansas City. As the executive sponsor for the Fed's Payment Improvement Initiative, it's been my privilege to work with a number of you in this room and across the Federal Reserve System as we've engaged with the public on modernizing the nation's payment system. In particular, I want to thank Dave Saponaro, the Chief Operating Officer at the St. Louis Fed, who could not be here today. He has capably directed our efforts, and I am grateful for his leadership. These efforts, under the auspices of the Faster Payments Task Force and the Secure Payments Task Force, were extensive by necessity, and importantly, laid the groundwork for the future. My colleagues and I are grateful for the contributions and engagement of hundreds of individuals and organizations across the banking and payment industry and other groups as well. The Federal Reserve Board is announcing today its decision about the Reserve Bank's role in fostering a faster payment system for the country. Joining us to provide remarks on the Federal Register announcement is Federal Reserve Governor Lael Brainerd. Lael was appointed to the Board of Governors in 2014, and she holds important leadership roles in our various payments committees. And it has been my privilege to work with her on these payments modernization efforts. Following Governor Brainerd's remarks, we'll have a question and answer session facilitated by Susan Foley. Susan is the Senior Associate Director of the Board of Governors Division of Reserve Bank Operations and Payment Systems, and she also has been instrumental in leading the Federal Reserve System's payment improvement efforts. I'm glad she could be here with us today, too. And so now, please join me in welcoming Governor Brainerd to the podium.
Well, thank you very much for those kind remarks, and it's great to be here today with all of you in Kansas City, and to be here with Federal Reserve Bank President Esther George to talk about the future of America's payment system. Our payment system is a vital part of America's infrastructure that touches everyone. The choices we make about payments infrastructure today will affect all Americans many years into the future. So today I'm excited to announce the Federal Reserve will invest in a new service to help ensure that real-time payments are available to everyone. The Federal Reserve will develop the FedNow service, a real-time payment and settlement service for the future. Everyone deserves the same ability to make and receive payments immediately and securely, and every bank deserves the same opportunity to offer that service to its community. FedNow will permit banks of every size in every community across the country to provide real-time payments to their customers. Today, whether you are relying on ACH, a debit card, or a check, it can take a few days to get access to your funds. With a Federal Reserve real-time payments infrastructure, those funds would be available immediately, whether to pay utility bills or split the rent with roommates, or for small business owners to pay their suppliers. Immediate access to funds could be especially important for households with fixed incomes or living paycheck to paycheck, when waiting days for the funds to be available to pay a bill can mean overdraft fees or late fees that can compound. Similarly, getting immediate access to funds from a sale in order to pay for supplies can be a game changer for small businesses, potentially avoiding the need for costly short-term financing. Last November, we asked the public about possible actions the Federal Reserve could take to support interbank settlement for faster payments. We received more than 350 comments on a Federal Reserve faster payment service, representing nearly 800 organizations. fully 90% of those comments called for the Federal Reserve to operate a real-time service for faster payments. Support came from a wide range of stakeholders, including individuals, merchants, fintech firms, and banks. Commenters focused on four broad sets of reasons. First, they noted that the Federal Reserve would ensure equitable access to banks of all sizes nationwide by operating a real-time service for faster payments alongside the single private sector system. Commenters highlighted the importance of safety in faster payments and noted the Federal Reserve's record of resiliency, especially during periods of stress. Commenters observed that a Federal Reserve real-time retail payment service would increase competition and decrease concentration and provide a neutral platform for innovation. This broad support echoes the conclusions of the Faster Payments Task Force, and similarly, the U.S. Treasury recommended that the Federal Reserve move quickly to facilitate a faster retail payment system, such as through the development of a real-time settlement service, citing efficiency, accessibility, and innovation. In determining the path forward, we're building on the Federal Reserve's long history of operating payment systems as a core part of the nation's payment infrastructure. Since the Federal Reserve banks opened for business around the country in 1914, as directed by Congress, they have provided payment and settlement services in healthy competition with private sector providers. When you look across the current payment infrastructure, whether in check processing, automated clearinghouse, ACH services, or funds transfers, you will see a Federal Reserve service operating alongside private sector providers. Indeed, the GAO has assessed the Federal Reserve's provision of payment services and concluded it has benefited U.S. payment system and its users. The Federal Reserve does not have regulatory authority over the pricing set by a private sector system, or to require a private sector system to extend the service to banks of all sizes, particularly to that last mile. In some other countries, central banks have been assigned the responsibility for regulating payment systems. However, this is not the approach that Congress has taken. Instead, the Federal Reserve's role as an operator has long been the preferred approach to promote accessible, safe, and efficient payments in the United States. Through the FedNow service, we will provide a foundation for the future, a modern payments infrastructure that allows innovation and competition to flourish and delivers faster payments safely and securely for all. To ensure fast payments are available to everyone, FedNow will be accessible to all banks, no matter their size. Given our long-standing service connections with more than 10,000 banks across the country, the Federal Reserve is uniquely placed to deliver this outcome. The bar is high when we assess whether the Federal Reserve should provide a new payment and settlement service, as it should be. We have carefully analyzed the criteria of the Monetary Control Act and long-standing Federal Reserve policies, considered the comments provided by the wide range of stakeholders, and studied the experience of foreign central banks. We are not making this decision lightly. On balance, after carefully weighing the important considerations on both sides, we have concluded it is our responsibility to take action in support of a real-time payments infrastructure accessible to all. While we will work hard to stand up the FedNow service in a timely manner, our most important goal is to achieve nationwide access, reflecting our public mission. A key foundation of the payment infrastructure is interbank settlement and clearing, the movement of funds and the associated information between banks. Today, the U.S. retail payment infrastructure lags behind countries such as Europe, Mexico, and Australia that have already implemented real-time interbank clearing and settlement. In contrast, here in the U.S., the gap between the transaction capabilities of the digital economy and the underlying payment and settlement capabilities continues to grow. Early adopters of fast payment services have had to rely on a legacy infrastructure designed for a different era. Some services that offer real-time funds availability to certain consumers do so by conducting interbank settlement on a deferred basis, which entails a buildup of obligations like IOUs between banks that could present real risks in times of stress. These are not resilient long-term solutions for our dynamic economy and the banks that support it. We're seeing some companies looking to establish a payment system that bypasses our banks and our currency. Facebook's Libra project raises numerous concerns that will take some time to assess and address, but one thing is clear. Consumers and businesses across the country want and expect real-time payments, and the banks they trust should be able to provide this service securely, whatever their size. To provide everyone with the ability to send and receive funds securely on a 24/7/365 basis, banks are going to need to embrace and invest in real-time innovations, and the Federal Reserve will need to provide a safe and efficient real-time interbank clearing and settlement service. We're proud of our strong record of cooperating with and supporting private sector services while fostering competition for public benefit. We have provided vital support to the sole private sector provider of real-time settlement for faster payments, and we will continue to do so. The Federal Reserve provided a joint account which enables the private sector operator to offer real-time payments. Moreover, today we're announcing our intent to explore the expansion of Fedwire Fund Service and National Settlement Service operating hours to support the efficiency of the joint account structure for the private sector RTGS service and to provide broader benefits. That said, the joint account structure, with its requirement of pre-funding and its settlement on a private ledger, is fundamentally different from the approach the Federal Reserve will use, which will enable transactions to settle directly between banks. We're pleased that the private sector faster payment service is in the market, and we see important benefits from the resilient and competitive market that would result from the FedNow service providing an alternative consistent with the requirements of the Monetary Control Act. The requirement to consider the best way to make our payment and settlement services accessible to banks across the country, along with long-standing principles including cost recovery over the long run, guides our assessment of when the Federal Reserve should engage in the payment system. I want to share with you some of the analysis that we considered in making today's decision through the prism of our public policy goals of accessibility, safety, and efficiency. Accessibility means serving more than 10,000 banks of varying sizes and missions that are in communities all around the country. It turns out no single private sector provider of any U.S. payment system has ever achieved nationwide reach on its own, whether it be checks, ACH, cards, or wire transfers. Acting alone, a single private sector RTGS service will face significant challenges in establishing an accessible infrastructure with nationwide reach. In contrast, because of our experience providing other services, the Federal Reserve already has invested in connections and customer service relationships with nearly every bank, small and large, across the country. With our 12 regional reserve banks, we have the capacity to meet the needs of banks serving different communities and with different needs and operating models. For that reason, commenters stated that the Federal Reserve is uniquely positioned to offer nationwide access to a new payment and settlement service for faster payments. FedNow will allow faster payments to reach banks of all sizes and their customers across the country, which is especially important for rural communities who often struggle with access to financial services. Guided by our public mission, the Federal Reserve serves the need of all banks, no matter how small or challenging to reach, and with competitive fairness. In response to our request for feedback last November, several commenters emphasized how much they value the Federal Reserve's mission of providing nationwide access on fair, transparent terms, and expressed concern that a sole private sector service provider may be less likely to exhibit the same commitment over the longer run. Safety is also vital. If the Federal Reserve does not stand up a service, there will be a single provider of real-time retail payment services. We are mindful of the serious safety issues associated with a single point of failure, a risk that will rise as faster payments grow. Stakeholders have noted the importance of having access to more than one real-time payment service for backup purposes in order to provide resiliency through redundancy. In fact, many banks already take advantage of having connections to multiple operators today in check, ACH, and wire. The Federal Reserve has always had a vital role in promoting the safety and stability of the U.S. payment system by providing liquidity and operational continuity, especially in times of stress. The FedNow service would allow the Federal Reserve to extend this role into the real-time retail payment market. Finally, the U.S. real-time retail payments infrastructure stands to gain from competition, including through higher service quality over the long run, which in turn should support wider adoption. The FedNow service will provide a neutral foundation for innovation and competition in end-user faster payment services. In response to the request for feedback, merchants and fintech companies commented that a Federal Reserve real-time retail payment service could broaden the scope for innovation. They note that a single provider that is owned and operated by one segment of the payment industry may focus on a narrower set of use cases that don't reflect the full breadth of possible use cases for faster payments. In contrast, the addition of the FedNow service could provide a springboard for broader private sector participation in developing innovative end-user services. With the announcement of the Federal Reserve real-time payment service, we're embracing a path that will bring transformative rather than incremental change to our retail payment infrastructure. The FedNow service will operate continuously at all times of the day, every day of the week, consistent with the needs of faster payments, and will be designed to process large volumes of payments rapidly. In the months ahead, we intend to explore a variety of approaches to achieving a real-time retail payments infrastructure with nationwide reach. One such approach might be for different payment services to interoperate by exchanging payments among the services directly. Such interoperability is an important goal that we will pursue as standards, technology, and industry practices change over time, although it is not yet clear whether it will be an initial feature. The Federal Reserve plans to devote the necessary resources to deliver the highest quality FedNow service in a timely manner. We're working to streamline our internal processes to move quickly in the market. President George will play an integral role in this new process, and the Conference of Reserve Bank Presidents has pledged its support. It's important for the Federal Reserve, working with the payments industry, to act quickly in finalizing the initial business requirements. We will need to hear the views of payment system stakeholders on the features of the FedNow service as we discuss in our Federal Register notice. We will engage with the industry through groups and forums to finalize the design and features of the service. These conversations will provide an opportunity for all stakeholders to work together to shape the evolution of our payment system. Let me just conclude by noting that the best part of my job is getting to travel to communities all over the country with people from our reserve banks. Earlier this month, I joined my Reserve Bank colleagues for a visit with bankers and community organizations in Scranton, Pennsylvania, to hear about the biggest challenges they are facing. The head of a bank that's been serving the Scranton area for more than a century told me that for his community bank to remain competitive in its payments offerings, it is vital to be able to rely on the Federal Reserve for real-time payments, just as he does for check, ACH, and wire transfer. I appreciate the importance of community banks to the economic health of our communities, and I recognize the role of the Federal Reserve in enabling community banks to offer payment services on a competitive basis. I'm confident that by working together with all of the stakeholders across our payment system, we can collectively achieve accessible, safe, and efficient, faster payments for all. Thank you very much.
Well, good afternoon. Well, let me start by saying I'm thrilled to be here today with you both to facilitate a discussion about our announcement today. But let me start with a little context for how we came up with the questions I'm about to ask. And as Lael mentioned, we received hundreds of letters representing approximately 800 organizations in response to potential actions that the Federal Reserve could take to support faster payments in the United States. As you might imagine, there was particularly keen interest in whether or not the Fed would develop a new real-time gross settlement system. And as a result, we've had the opportunity to have conversations over the past couple of months with members of the media, members of Congress, industry groups, and other organizations, and been able to answer their questions about the role of the Federal Reserve in the payment system, the role that we play and how we might make this decision, and several what-if scenarios of if we did build a new system, what would that mean? So drawing on all of those conversations, I've come up with some questions for you that I think will be of keen interest both to those attending today in person and online. And with that, Esther, I'll start with you. Okay. So clearly this is a big announcement for the payment system. Can you talk about the last time the Federal Reserve made such a significant decision related to the payment services it offers?
Yes, I can. I'm that old. Actually, it's been a while. The last time the Fed offered a new service, certainly of this magnitude, would have been some 40 years ago when we began to offer the Automated Clearinghouse Service, or ACH. At the time that the Fed engaged in that service, it was really evolving. And over the last 40 years, we have seen it become really a core part of our payment system in this country. Whether it's used to rely on direct deposit or bill payment, as Lael talked about in her remarks, we've now come to depend on ACH as a core service. And it represents some 15% of all the payments transactions in this country. I expect this new service could be on a similar path in terms of evolving as adoption grows. We have every reason to think, based on what we've seen so far, that households and businesses want real-time payments. And as we develop this service, we'll see how it unfolds over the next 5, 10, 15 years, 40 years from now. You'll see where it is.
Hope so. So you have my next question too, Esther.
Okay.
So some folks have asked, what difference will this service make? They point to the fact that they have an app on their phone that enables them to pay friends today, anytime. So what context could you provide to us about the difference?
Yeah. I often hear that. We've become used to saying we can do so many things on our phone, and clearly you now can move money through various services on your phone. And I expect that is going to continue, and it could well proliferate. The things we're talking about today really represent the infrastructure, as Governor Brainerd said in her remarks. This is really the plumbing of the payment system. And so when people are moving money, it may feel like you and I are trading money instantaneously, but the fact is it has to go through the plumbing in a way that may take much longer for those things to actually come out of my account and get into your account. By updating our infrastructure with this kind of a service, we can now realize the full functionality of what real-time payments means. And I think going forward, we'll only encourage more innovation. It'll be built on a foundation that is much more modern than we have today.
I always love when we're referred to this payment system as the plumbing, because I never imagined I'd be called a plumber as I got into my career, but I appreciate that.
It's a good profession.
Yeah. So Lael, we've heard from many corners of the industry, many different perspectives. Many stakeholders have said the Fed must build this new real-time gross settlement system, but that opinion was not unanimous. Can you talk to how the Fed made its decision?
Yeah, this is a very, very momentous decision. As Esther said, we really only get to make this kind of decision once every 30 or 40 years. So we really did engage in very extensive consultations. As Susan said, we got 350 comments on the question of the Federal Reserve service alone, with 90% of those asking us to set up a real-time payment service. We deliberated over all of the considerations that we're required to meet under the Monetary Control Act. We looked very carefully at all of the considerations that we expect of ourselves under our own policies. And I think at the end of the day, we really had to look into the future. And for me, the most decisive consideration was the question, 10 years from now, 20 years from now, if we decide not to invest in real-time retail payments infrastructure, will we have carried out our responsibilities to the U.S. financial system and the U.S. economy? And at least in my case, the answer to that was very strongly, when we look back 10 years or 20 years from now, the greatest regret will if we did not invest in this very important infrastructure.
Thanks. So my next question is also for you. So the Federal Reserve, as you know, has historically played many roles, from operator to regulator. Besides building the new service, is there other things that the Federal Reserve could have done to facilitate these broad benefits and nationwide access?
Yeah, so I think we also spent a lot of time, and when I say we, it's really the Conference of Presidents, the payments committees that are within the Conference of Presidents, and then across the board in the Conference of Presidents and within the board. We spent a lot of time asking about what could we do other than investing in a service? What possibilities do we have under authorities? And the conclusion is, while other central banks have clear regulatory authorities over their payment system, we do not have authorities, for instance, to set prices or to require a service to extend to the last mile. Historically, the way that the Fed has brought accessibility and safety and efficiency to the payment system is by operating alongside of the private sector. And that is clear in the way that our authorities read, I think, statutorily, and it's also clear in the historical experience.
Thanks. Esther. While we saw an overwhelming majority of the comments come in supportive, we've also heard from a few commenters that there's an opinion that the private sector already has a service that is sufficient for the country's needs. Could you dive a bit deeper into how we support that service and also how the FedNow service would be different from it?
So having the private sector involved in real-time payments is important. It was important to us from the start of our work to facilitate understanding how this would look in the U.S., what attributes such a system would have, and from the start, really talking to many in the industry to say, what ideas do you have? How will this get developed? And as you said, today we have a single provider for that service. And as they develop, we've played an important role. For example, making sure that they had access to a special account at the Federal Reserve where they would be able to offer their service and create settlement on their books to do that. We thought that was an important feature to make sure the private sector could provide a service. And with today's announcement, that Federal Register notice will point to other things that we could be prepared to do, whether that's expanding the hours that our settlement services are open, where it's thinking about liquidity management as it relates to how that special account operates. We will continue to see what is possible in terms of facilitating the private sector's role in that. When you talk about what's different about what the Fed would be doing in this space, though, there are a number of differences. Just the mechanics of that account. So when you're the central bank, the settlement happens directly in a Fed account. That's the way the payment system works today. It is where banks hold reserves. So there are differences just by virtue of who we are and how we operate in that payment system. But I think importantly, taken together, the private sector and the Fed has ensured that the nation has broad accessibility, that there's equitable access. And I think importantly for us, we think a lot about the security of that system and how resilient that system could be in times of trouble. So support you will see coming from the Fed, also recognizing what we would be doing will be filling out other aspects of the payment system.
Okay. A couple more questions and then I'll take some from the audience. And then I have more.
What time are we going?
Oh, they'll cue me when if they're ready to cut me off. So, Leo, we've seen some articles in the past few months that have noted that if the Federal Reserve builds a new service, it will actually slow down progress towards achieving faster payments nationwide. Can you share your perspective on today's announcement and its implications for the pace of achieving nationwide reach for faster payments?
Yeah, so I think we have thought a lot about this question. And of course, time to market is a very important consideration. And the private sector has done a good job of getting a system up and running. And again, as Esther noted, we have supported that, facilitated that. For us, nationwide reach is really the concept that is in line with our public mission. And the question of how long will it take to achieve nationwide reach, I think, is a quite different question. In answering that question, you have to take into consideration that we have already, the people in this room, all of our reserve banks have already built out an infrastructure of customer service relationships and connections to the 10,000 and more depositories around the country. And so in many respects, since we are the service provider that has been providing those services to the harder to reach institutions for our other services, we're going to be taking that concept of timeliness very much to heart, and building out that last mile is part of our considerations of timeliness that we're going to take very seriously.
Thanks. Esther, one more for you, and then
Okay.
I'll take a break. So we've heard a lot of questions lately on how a new Fed service and the private sector will interact. Much of what we're hearing from the public comments, as well as news articles, public opinion articles, refers to worry that the two systems will not interoperate, and that could be detrimental to the goal of people being able to pay in a seamless way. Could you respond to some of these concerns?
Yeah. So again, from the start of our engagement with the private sector, we knew that interoperability was one of the attributes that broadly people thought would be important. And certainly we think it's important. This will be a desirable feature as we go forward for this new payment rail. Depending on how the comments come back, how we hear from the public on how these features might work, I think there are several ways we can achieve interoperability. So we often think about just the direct exchange of payments, and certainly that would be ideal, I think. Whether we get there right away, we'll have to see. There are other options. We have other payment services today that don't have that direct exchange of information, but through joining those services, you achieve that in the end. So I think there are a variety of ways we can come at this. It is possible. I think we will continue to work toward how to make that interoperability work on behalf of the public and how they experience that payment system. And it may be a bit of an evolution as we go through this.
Okay. So let me turn to the audience just to see if there's any questions from the audience we can take. Oh, I see one back there.
Hi, Denny Galino.
I think there's a mic right there for you.
Pardon me, Denny Galino from Mace News. I think they'd pull my press pass if I didn't ask you about today's lurch in the markets, Governor and President George. Does this have any implications? Of course, it's a one-day move, but implications for future policy?
Of course, I'll defer to the governor.
Nice.
So I am certainly monitoring developments very closely. I have said, and I think others have as well, that we're committed to sustaining the expansion. And I'm certainly monitoring developments for their implications for the outlook, and I'll continue to be very attentive to them.
No, this is exactly how policymakers approach it. Markets move quickly. It takes some time to see how that evolves. And so the best, I think, that you can do right now is just to monitor and see how that unfolds.
General question. It really makes your head spin, all of the unusual circumstances the Fed is facing these days. You've got negative yields, you've got the inverted yield curve, you've got maybe a hostile White House. But is there a path for the Fed to recalibrate its approach considering all of these many influences? Is it time for some more fundamental kind of recalibration of policy?
Well, I'll say a few things. Yeah, I'll say a few things. First, let's not forget that we have a very clear mandate from Congress, and in many respects, we are pursuing that mandate, and we have a strong labor market. We have the lowest unemployment we've had in 5 decades. We also have carefully and very consistently been supporting the movement of inflation back to its 2% goal on a sustained basis. And relative to a lot of other jurisdictions, we really are seeing a lot of progress on those goals. That said, I think there are some features of the new normal that are different than we policymakers may have confronted over the 30 years prior to the crisis. Those features include things like a very low equilibrium interest rate. That's something that you see around the world. Inflation seems to be a little bit soft relative to that 2% sustained goal that we're trying to achieve, underlying trend inflation. And then the third thing is that inflation seems to be somewhat less sensitive to resource utilization than it had been in previous periods. And so that's the reason that the FOMC has been engaged in a process that we have dubbed Fed Listens. We've been all around the country listening to people in communities, including here, just asking how they're experiencing the economy. And then we are taking that back and asking, how do we need to think about our monetary policy framework? And are there some changes that we could be making over the longer run to make sure that we're as equipped for the new normal, that our framework is as effective for the circumstances of the new normal? And that process is ongoing.
Yeah. In addition to those factors, we know structural change, which is often slow-moving, but has important impacts like demographics. We watch what happens with productivity as technology evolves. All of those things will be important influences on the variables that are the responsibility of the FOMC to think about in achieving its mandate. So this framework review, I'm sure, will offer us an opportunity to talk about that, to see whether any changes are required or whether we simply continue to to move forward as we have.
Well, I know these are exciting topics, but of course I want to bring us back to the plumbing. So let's bring back to the plumbing for a minute. We may only have time for one or two more questions, but Leah, let me ask you this one. We've seen a few articles saying that the Fed won't be innovative enough to offer this new service for faster payments. Well, I know you may disagree with that personally. Can you share a little bit about your perspective of how you see it differently?
So we also asked in our request for feedback this question about how are we going to best promote innovation in retail payments. And a lot of the commenters, and this went really well outside just the banking commenters, but across the payments landscape, including fintech firms and merchants, they were really focused on innovation in end user services. And in many respects, the comments we received were that by providing a infrastructure layer that would permit that real-time clearing and settlement between bank accounts, that would provide a more neutral and a more fertile foundation for private sector innovators to innovate in terms of end user services. And so in many respects, when we think about innovation in retail payments, that same dynamic of the Federal Reserve being the provider of infrastructure was seen to be also the most conducive approach for innovation in end user services.
So I think based upon our time, that is our last question. I want to thank you both for sharing this announcement with us today and for answering these questions. I also want to remind folks online in particular that the Federal Register notice is available on the board's public website as well as on fedpaymentsimprovement.org. Through the Federal Register notice, as Leo mentioned, we are seeking comments on the FedNow service and all aspects of the FedNow service. And we also plan to engage fairly quickly with the industry to talk about the FedNow service features, functionality, and design so we can finalize that quickly. And with that, as just our reminder to make sure you comment, I'm going to say thank you, and thank you to everyone who attended here in person and online. And we look forward to working with you as we go forward in this endeavor.